This video we're going to go over an opening range breakout. My name is Randy Opper with chartpattern.com, and you know me from the chat room as CM. I've made thousands of live calls and entries for folks in the chat room, and so I'm going to go over a strategy for entering a trade called an opening range breakout. And what an opening range breakout is very simple. In the case of Apple, there was a TBA that was placed in the newsletter on this stock. That TBA was approximately new highs at around 195, 196 on Apple. And you'll notice that after earnings, the stock gapped. And many people will say, well, how do I catch it? How do I get into that stock? And an opening range breakout is one simple way to enter a stock when there's momentum and strength and you're trying to find a way into that pivot. So we'll start with, this is your daily chart. Now let's go to a lower time frame. This is a 30-minute chart at that same period of time when Apple gapped up on strong earnings. And you'll notice I have a green line and a red line. And the green line is where we're going to talk about executing the trade for a long. And the red point would be where the stop would go. And what has happened here is, this is a 30-minute chart. So each bar is 30 minutes long. And an opening range breakout is the stock opens, the range of the first 30 minutes in this case was about 199. You can see the prices here to the left, 199.26 down to 197.31. And so what you would do is you would wait for that first bar to develop and then buy the breakout past that bar. So you basically would be purchasing 1 penny over the green line with a stop at a penny under the red line. Very simple. And what you're looking for is it to break that opening range, that early morning range, and continue and follow through. And you'll see in this case, for those of you who can read price action, you'll also notice this created a beautiful pennant right above that 199.27 breakout, and then proceeded to extend significantly higher into the 208 range. So here's an example where you gained 8 points on this stock, more than 8 points, I should say, on this stock in just a few days by buying the opening range breakout, that first range. Now, some people will go to a 5-minute opening range breakout. And that's fine if you choose to do it. As a trader, I choose to avoid 5-minute periods of trading and looking at 5-minute charts too much because there are so many computer algos that are programmed to play with those time frames and to scalp against you, that they really are there to stop you out and play games with you so that they can extract a return. And so by going with a 30-minute or a 15-minute, a little bit longer of a time period, you're getting rid of some of that noise. When it really broke that 30-minute, it really followed through in this case. And so that's what you're looking for. So again, opening range breakout is simply the opening bar, the range of that bar, the leaving of that range, and the stop would be the failure to follow through and falling below that range. Okay, so I hope this helps. I wish you good trading. If you have any questions, email me at Randy, R-A-N-D-Y, at chartpattern.com. And I wish you good trading.